Welcome to Forex CMC. On today's episode, I'll be looking at how to calculate your risk. Okay, how to determine the risk the lot size that best suits your risk. Okay, now sometimes this is a big challenge for some traders because they find it difficult to know the actual lot size that matches with a particular percentage of their account that they are trading. Okay, so the risk formula or the lot size to use in any trade, it's um, equal to the risk amount, that is the amount you are risking in terms of dollar. Let me just put the dollar sign here, over number of pips. Okay, let me just say pips times pip value. Please pay attention. Times pip value. Okay, now the question is, what is pip value? So we'll be looking at them one by one, and for the purpose of understanding, this is risk formula. Okay, risk amount over pips times your pip value. Okay, so in this video I will be um, teaching you how to calculate the appropriate lot size using this risk formula on all currency pairs. And basically all the currency pairs you ever have, broadly speaking, can be categorized into three. That is currency pairs that are quoted in USD. That means uh, they are quoted in USD. It can be GPB USD, it can be EUR USD. You get it now. So it can be that. So that is the first category I'll be looking at. Then the second categories are currencies that the base currency it's in USD. Okay, so that means like USD card, USD JPY, USD CHF, and stuff like that. Now the third categories are currencies that are not quoted in USD or neither has this base currency as USD. For example, we'll have GBP AUD. Okay, another that like it, like let's say GBP NZD. Okay, so on and so forth. So those are the three categories we're going to look at. But first category, like I said, for the purpose of understanding, is currencies that are quoted in USD. Okay, that is that the last pair is USD. Then the second one is the currency that the base is in USD. That means that the first quote, or I mean the first pair is USD. Then the third category is a currency pair that none of the pairs are in USD, like GBP AUD, GBP NZD, so on and so forth. There are very many, but these are the three broad categories of all currency pairs we ever see. Okay, with respect to quotes, with respect to quote and base, with respect to quote and base. Okay, now let's hop in now to determining currencies that are quoted in USD. Okay, so first off, in currency that are quoted in USD, we already know the risk amount. For example, you will say, okay, I want to risk $25 out of my $100. I want to risk $10 out of my $100, like that. You know, okay, I want to risk so amount. Even so that when the trade goes against me, I will not lose more than that. Okay, now the number pips, like okay, pips is often the fourth digit in all your USD pairs. Okay, that is on currency that are quoted in USD. Okay, apart from on other currencies, but basically currencies that are quoted in USD, the fourth digit is often the pip. So that means that one pip, it's equivalent to 0.001. Okay, so we already know. So by saying that, we've already know what the pips we're talking about in respect to the pips. So if you are risking 10 pips, that will be okay. That will be that will be 0.001. 0.001. Okay, that is if you are risking 10 pips. Okay, if you are risking 20 pips, like it will be, if you are risking 20 pips, that will not be 0.002. Okay, so on and so forth. Okay, now what of pip value? Please, this is where I want you to pay attention very well. What of pip value? Pip value in USD is simply multiplying one pip. Okay, multiply one pip by the value of one standard lot. Like that one standard lot is equivalent to 100,000 units of the base currency. Okay, you can do more research on that, on lot sizes. Okay, you get now, so you can do more research on that. So one lot is equivalent to 100,000 units of the base currency. So so that is how you get your pip value. So that means that for all USD pairs, okay, this pip value will be equal to $10. Okay, now in a nutshell, what if the lot size I want to use, I don't want to risk more than let's say $20 and not the rest of them. How do you do it? It's very simple. You just go to this formula and just say the lot size you're going to use. Let's assume you want to risk $25. Okay, to be 25, that is your risk amount. Now over your pips. Let's assume you are risking 10 pips, so write it 10. Okay, times that your pip value for all currencies that are quoted in USD is always fixed. Okay, so that means that will be 10 times 10. So this answer will give us 0.25. So that means the lot size we are going to use therefore will be 0.25. Okay, 0.25. So that is the lot size we're going to use, 0.25. So when you put 0.25, you will be risking, and you're risking 10 pips. At the end of the day, the trade goes against you. You will lose exactly $25. Okay, and other let's say for example they also charge you commission plus your commission. Okay, so that is for currencies that are quoted in USD. Now the second one we're going to look at is currencies that the base currency is in USD. Okay, so for this we already know the risk amount. Okay, so we're looking at the second category now. Okay, we're looking at the second category, that is currencies that the base is quoted in USD. Okay, now the question is, we know the risk amount, which you can determine from our individual risk parameters. Like some person can decide to risk $20, $30, $1,000, $2,000, as the case may be. Okay, then on we know how to calculate pips now. Okay, and in US, in currency that are quoted in that are not quoted in USD too, the pips sometimes it can be to the fourth significant figure. I mean, yeah, it can be to four let's say four decimal places. Sorry, not four significant figure, four decimal places. That is 0.001. There are exceptions to that. So the easy way to do it is you look at the price in your Meta 4 or Meta 5. Like for example, in USD JPY, that is an exception. USD JPY, okay, you will see sometimes that is not up to uh USD JPY. Sometimes the price can be I think the current price is 132.62. In this case, it will no longer be the fourth decimal place, not be the second decimal place, because when it moves one pip, it will be to 63. That means to be to, when it moves one pip movement will give us this. Okay, so that is for USD JPY. So the easy way is just to look at the currency pairs that you want to trade, and look at the value, okay, in terms of your MetaTrader for MetaTrader 5. So the last value there, not the raised to power. Okay, there is one that is raised to power, that is pipette, but we're talking about pips. Okay, so the last digit, it's what determines the pip, I mean the pip, uh number of pips. That's how to calculate number of pips. So for this now, one for USD JPY, for example, one pip will be equal to 0.01. Okay, that is that. Then how do we determine the pip value? Please, I want you to pay attention here now. So to determine the pip value now, okay, and that will be one pip. To determine pip value, the value, it will be one pip over the exchange rate. Okay, the exchange rate, that is the price that the currency is currently at. Okay, this is how you get your pip value. Okay, that's how you get a pip value. Then you multiply by your 1000. Okay, you multiply by 1000. So that means all this, sorry, I mean you multiply by 100,000, sorry, times 100,000. Okay, you get your pip value. This is very simple. Okay, this is very simple. Now let's take one example. Okay, so this is my MetaTrader 5. Now if I want to let's say if I want to trade USD CHF, for example, and you see the current price is at 0.8932. It doesn't matter 32 or 33, whatever price you take, because the price change is very minute, so it will not really have a significant effect on your pip value. Okay, it will not have a significant effect on your pip value. So this is the price is 0.8932. Okay, so that will be our exchange rate, or you pick 33 or 32, anyone is it's correct. Okay, so let's go. Now you remember that USD CHF is to four significant figure. Okay, that it has four digit after decimal point. So what we do there is we say, okay, one pip. Remember, to find pip value is one pip over the exchange rate. So one pip will now be 0.001, okay, over 0.8932. That's what it gave us just now, and the answer, so the answer is 0.000111. Okay, and that is the pip value. Remember, I say you multiply it by 100,000. You know where the 100,000 is coming from one standard lot. At the end of the day, our pip value, it's equals to 11.1. Okay, so that is the pip value of USD CHF. Now, how do we incorporate into the formula? So you know how to do it already. Risk amount, the amount you are risking, number of pips times the pip value. So let's assume we are risking, in this example, let's assume we are risking 10 pips. Okay, let's assume you're risking 10 pips. So how do you do it? You now say the risk now equals the risk amount. Let's say we are risking let's say $20, and our number of pips you are risking is 0.001. Remember, we say 10 pips. Okay, times, now this now be 11.1. Now let me say something about pip value. Pip value is always the value is always fixed over a long period of time, because currency changes slightly. Okay, currency changes slightly. It's difficult to see 0.89 today and not see 3.89 tomorrow. So it changes slightly. So this pip value, sometimes a person will just decide to cram this pip value and just say 20 pips. Okay, I'm $20, I'm risking 10 pips, and my pip value is this. They'll just do that, and you have the lot size that you're supposed to use. So when you do this divided by this, and that will. Oh, I'm sorry. I think I made a mistake somewhere. This place supposed to be 10, not we've already used that value to we've already used to calculate here, so there's no point. So we'll put 10 pips now. Okay, and if we do that, our answer is 0.18 lot. So that means for the lot size we want to open should be 0.18. That is the appropriate lot size to open when you are risking um $20 and you are risking 10 pips. Okay, so that is for that. Then we'll go to the last category when none of them is quoted in USD. Now the approach is also the same as the one we've explained, that is using the GBP AUD as example. Okay, so the price it's at 1.9298. okay, and let's say also in this case we are risking 10 pips. Okay, and let's also say we are risking $25, risking 10 pips, risking $25, and the current price is at 1.9298. Now, how do we do this? Remember, we have to look for pip value. Pip value differs across different currency pairs. Like we've seen the one that are quoted in USD, the one that are quoted in that the base currency is USD, the one that now in this case, this one there will be a big difference because JBP, AUD, NZD, let's say GBP, NZD, and so on and so forth, we have different pip values. So it's that pip value that is very important. Now, how do we look for that pip value? It's also very easy. So this is to look for the pip value. Remember, one pip, the value of one pip, over the exchange rate now. Okay, then you multiply by, like I said, you multiply by 100,000 times 100,000. Okay, so that is how you get your whatever answer you get. That is your pip value. But let's calculate this and let me give you the answer. So if you do that, the answer will be 5.18. Okay, so I hope this was insightful. So please, what you do is try this on other currency pairs you can lay your hands on. Is just for you to know these things, the number of pips. Okay, the pip value of which you know is one pip, one size of one pip. Okay, not just one, the size of it, which is 0.001. Let me put this in context now. So to know the lot size to use, it's, you say lot equals the amount you are risking. Okay, the amount you are risking in dollars or whatever currency pairs or whatever currency you're using, then over the pips, number of pips. Okay, not size of pip now, number of pips. Okay, then times your pip value. And to find our pip value, what we do is to find our pip value. Pip value will now be equals to your pip size. Okay, remember, know the difference. Pip size, which is one pip being 0.0001, that is your pip size. Okay, it's different from just say number of pips. Number of pips is 1, but the pip size is 0.0001 in terms of currency that have USD, that are quoted in USD. Okay, so then that is p value is pip size over over the exchange rate. Okay, over the exchange rate, and all what you get you multiply by 100,000. I hope this was insightful, guys. I hope you learn one or two things from it. Please don't forget to subscribe to this channel, turn on your notification button. Cheers and God bless you.